Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
Somebody asks, how do you know the auction has good structure? Or when we say the rally had poor structure, what the heck does that mean? How do we measure that? And the best example the best analogy I could think of in place is if you were building a brick wall, right? And you're supposed to lay these bricks one level at a time, cement each layer, you go back over it, you put the layer down, then you put cement down, then you put the next layer in, and as you're putting each layer, you put cement between the blocks to stabilize those blocks and kind of glue them in, so to speak, and so on and so forth. And you do that all the way up. As you climb the wall, you just keep putting layer after layer in until you reach the top, right? And hopefully the top is more regular and you're a better mason than me and you have a nice straight top. That's basically, that's what the auction is doing, is it's kind of like with each rotation, it's forming this check and it's really cementing in, and it might drop and consolidate for a little bit before coming back in, and it just forms this really heavy, and it doesn't have to be Gaussian, it doesn't have to be whatever a textbook shows, but what we had, just as an explanation, in this rally here, where we gapped wide down and then we just screamed up in an engulfing week here on Christmas week, and what we saw is a wall that kind of has a layer, but then there's a gap in there, and then there's another gap in here, and then what the wall has is a bunch of open holes in it. It's being built and it's standing, but it's got a lot of gaps. So it's not layer after layer after layer. We're just missing some bricks here and there and so on, and we climb up. And as soon as you put pressure on that wall, in other words, the market starts retesting these areas, it starts to fall through these gap areas. It starts to really slip through these gap areas until it finds a good foundation to come back from. And the foundation we expected it to come back from is that 83 area, the 4612, the 40, at least the way I define it, the 4575, which was here. Yesterday's low was 72 something. And then we end up kind of coming back up, and we have a little bit more structure. We still left a gap behind down below, but we did a lot of cleaning, and essentially that drop that we saw is what I talked about during this week, the final week of the year, that once we roll over, for whatever reason, you can come up with whatever reason you want. It could be inflation, Omicron, retail sales missing, holiday sales missing. It could be wage inflation. It could be supply chain issues. It could be Evergrande. Could be a myriad of reasons, and their entire organizations set up to profit from debating what that is or relaying what the reasons are. But we ultimately ended up with something like that last week. Last Wednesday, we had a nice deep drop. And then yesterday, we had a nice deep drop as well. We opened in a gap down. We had moved lower in the overnight session. In fact, we opened on Sunday night. I was doing my homework and I could see that it just had no bids and it was sweeping down. We ended up breaking lower, moving up, and then breaking lower during the session, only to close strong. So that's kind of an example of turning stuff that I talk a lot about into seeing it work. It's never as neat as I describe it. It just isn't. Life generally is not. But what we have done is we've really tested relatively deep in and ended up with this tail on the daily. We ended up with a neutral extreme close to the buy side, and we did expect the market to return, as I talked about this morning, did expect the market to return to 83. The MC point of control, this black line, is the most traded price since the end of October, where we started to break away above 45.32 and make a run. By the way, 45.32 was the next key area below 45.75 for me. And today again, we open, we test down. It looks like it looks like it might sell off again. Did not expect it to sell off very much. And now here we are in balance, and so we can stop for a moment and recognize that we are currently on top of the most traded and congested area in this range.
For more on volume profile and to learn about 2 volume profile setups from Futures Trader 71, check out our webinar here on YouTube, Key Components for Setups and Volume Profiling.